Okay, so before I get to this week's video, I want to share with you something that I commented in my Facebook group recently. I said that using fundamentals to trade is like calculating the average rainfall over a decade to decide whether you need to bring an umbrella out right now. So what I'm trying to say, right, the essence of this message is this, is that if you're a short-term trader, right, you are entering your trades for a few minutes to a few hours, all right, there is absolutely no point looking at fundamental data going back over the last 10 years. I would say that is actually noise to you as a trader, because what the market will do over the next 1-2 hours, right, will not be dictated by fundamental news over the last 10 years, right? Those news over the last 10 years is probably already priced into the market right now. Okay, so this is what I'm trying to say. I'm not saying that fundamentals are useless, because I know that traders who use fundamentals and combine with technicals in their trading, but those group of traders generally have a longer term approach. Not for those short term scalpers or even day traders, right? Such fundamentals are actually pretty much noise to your trading if you're trading such short frequency of time. Okay, so with that said, right, let's move on to this week's video. Okay, so the first market is rough rise, right? This is a market that to me is looking set to break out higher. Why is that? Because you can see a series of higher lows coming into this area of resistance. Okay, and this price action is a sign of strength to me, because if you think about this, if the market is at resistance, right, and still consolidating in front of it, it's telling me one of two things. Number one, the sellers are unable to push price lower, or number two, the buyers are willing to buy at these higher prices. And whatever the case is, this is a sign of strength, right? Because the market is is not backing down, right? This to me is a sign of strength. Okay, so how I'm looking to trade rough rise is if the market can break above this highs, I'll be looking to go long, right? I'll set my stop loss a buffer away from this low, right, somewhere here. So I don't want to have the market come down lower, hit my stops, and then continue to rally higher. Because ask yourself, right, how often the market has actually hit your stop loss below, support below the swing low, only to reverse in your intended direction, right? So this is why you always see me set my stop loss, right, having a buffer away from this structure of the markets. So look at this over here, right? This spike down of this low, right? Then the market rally up higher. This one, the market come down, stick out this low, and then it rally up higher. So just look through your charts, right, and you'll see this phenomenon happening over and over again. And this is why I'm setting a buffer away from this swing low over here. So with that said, right, that is a rough rise. Looking to long the breakout and see if the market can move higher. I'm moving on, right? I think Euro Yen is a market that's worth watching as well. If you look at Euro Yen, this market, right, you can see that it actually broke below this area of support. This is the area of support. The market break below it, and it's still hovering, below this previous support, now turn resistance. But what's interesting is that if you look at the 4-hour time frame, this market right now, again, you can see that it's coming into this area of resistance and it's holding up pretty well. So what I'm looking for again, right, is, to me, this market is showing sign of strength. If the market can still hold up for, let's say, another 3-4 candles, right, I'll be looking to long the breakout towards the upside as well for Euro Yen. Okay, and again, stop loss, right, I'll reference from this swing low, 1 ATR below it, right, because I don't want to get stopped out based on the sudden spike if the market reverse. So this is a Euro Yen, the daily time frame, and if I am long on the breakout, how I look to trail my stop loss, right, is using the previous candle low. So let's say the market breaks out, right, trades higher, 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 and higher. I'll just trail my stop loss, right, on the previous candle low. If the market breaks and close below it, I'll exit my trade. So this is what I call a trade management, right, on my part, on how I'm looking to manage this trade. Right, I'm not really the type of trader that have a so-called set and forget approach where I set a target, a stop loss, and I let the market do its thing in between. No, that doesn't resonate with me, right? I pretty much prefer to have a trade management, right? Even though it's a very passive approach, right? I don't really try to read too much in the price action, but have a very consistent technique to trail my stops, right? That's what that's how I do it. Okay, and that's for Euro Yen. And one more market that I want to share, right, because it's again showing signs of crack, is the China A50. So the China A50, right, you can see that this one again. This last week we talked about the S&P, right? If you recall, right, just a quick one, right? I said that the S&P. Never mind. Let's do this over again on the China A50. So as you know, right, in an uptrend, the market makes a series of higher highs and higher lows. Okay, and this is what I call the advancing stage. And no market will be in an uptrend forever. Okay, after the advancing stage, what happens is that you will then progress on to what I call the distribution stage. Okay, so the market goes into a range, and when it breaks down of this distribution stage, it goes to a declining stage, or otherwise known as a downtrend. So this is after this, it goes into a declining stage, right? Then it goes back into a range again, right? A range, otherwise called an accumulation stage. Okay, so this is what I call the 4 stages of the market, right? Where the market rallies, right? Goes into a wide distribution, breaks down, and then go back into a accumulation stage again, and then it repeat once more, goes into an advancing stage. So this is what I call the 4 stages of the market. And right now, for the China A50, as you can see that this is possibly the advancing stage. And over here, to me, is the potential distribution stage over here. Notice the range. And also you can see that there is an inverse head and shoulders pattern forming up, right? This is not, predicting that the market is, will definitely trade lower, right? Technical analysis is not about predictions, it's all about probabilities, right? And a very useful entry and trade management tool to handle your trades, right? That's what TA is all about. Okay, so what I'm seeing also over here is that there is a potential build up that's forming at the lows of support. Okay, so again, this to me is a sign of weakness, right? Because if this level is really a strong level, we should expect to see a strong bounce, a strong rally like this one over here, where the market came into this area of support. It got rejected pretty quickly. But this time around, it's still hovering down here, right? So this to me is a sign of weakness. Okay, so how I'm looking to trade this China A50 is that my bias now is towards the downside if the market can break below this area of support. Again, stop loss will be just 1 ATR above this swing high, right? Maybe somewhere over here. And yeah, looking to see how low this market can go. Right? If you look at the weekly time frame as well, you can see that this market has not break and close above the previous week high over the last 1, 2, 3, 4, 5, 6, 7 weeks or so. Okay, so even I think if you go back even further, right, previous week high, yeah, it has not a break and close above the previous week high, since this one over here. If I'm didn't see this wrongly, right, at this point in time, right. So if the market does break down, right, I'll just trail it using the previous week high, the same technique that I just shared with you earlier. Okay, so I guess my point with sharing with you my thought process is to me, there is no secret sauce or holy grail in trading. I guess the holy grail is all about, being consistent in your approach, right? Risk management, cutting your losses, riding your winners. So I hope by sharing with you, these weekly videos, you can see that my approach, right, is pretty much repeating the same stuff over and over again. Because I will be fishy of myself if like 1 week I'm talking about, trading, breakouts, volatility contraction, right? And the next time around, right, I'm using, fancy moving average crossover, and stuff like that, right? So my approach, right, I want to be as consistent and methodological as possible. Even when I trail my stop loss, right, I try not to deviate too much, right, and have too many, subjectivity into it, right? Once I set on something, right, I want to do it repeatedly, consistently over time, something that I can comfortably execute, right? So this is how you get consistent, and this is how you get consistently profitable. If you're always meddling, trying new stuff, new techniques, right, then your results will be pretty much all over the place. Okay, so I guess this is something that I'm not guess, right? This is something that is important, right? You have to understand it, embrace it, and I hope by sharing my own thought process, right, it kind of instill to you a discipline, a consistency, the execution to do something repeatedly, over and over again, till it becomes like second nature. All right, so with that said, I have come to the end of this week's market analysis, right? If you enjoyed it, please hit the subscribe button below. Please hit the like button, and any feedback, comment, just let me know below and I'll get back to you. So with that said, I wish you good luck and good trading. I'll talk to you soon.